Welcome to the Chrisman Commentary Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include the pressing challenge of housing affordability, my interview with nCino's Casey Williams on the latest wave of AI-powered mortgage innovations and how these tools are redefining lender efficiency, borrower experience, and what's next in intelligent mortgage automation, and why we're seeing mortgage rates continue to drift. You know, Optimal Blue is the only end-to-end capital markets platform built to power performance, precision, and profitability. Their cloud-native API-first technology connects the primary and secondary mortgage markets, helping lenders of all sizes operate more efficiently, manage risk more effectively, and maximize results. Optimal Blue. Modern technology, proven results. Our nation has plenty of interesting historical sites related to ghosts and unpleasant things, like Salem, Massachusetts. It lives with the history of the witch trials of 1692, during which 19 women and men were executed on charges of witchcraft. Today, the most frightening thing about the place is the traffic in October. But also, somewhat frightening is the price of real estate. If you want a decent place there, it's going to set you back at least $1 million. Speaking of home prices and U.S. transactions, foreign buyers are alive and well, apparently undeterred by the high prices and with a good percentage of them doing all-cash deals. At least affordability problems have been easing somewhat with the gradual decline in mortgage rates this year. We all know that increasing regulatory restrictions and requirements will not solve consumer affordability challenges. So there are a lot of thoughts out there of market-based homeowner affordability strategies that benefit many industries and homeowners. The pressing challenge of housing affordability amid the escalating impact of natural disasters is a crisis that demands innovative, collaborative solutions to ensure resilient and sustainable communities. Turning to rates, the U.S. trading week opened with optimism surrounding trade talks with China as the U.S. trade team agreed on a framework for a deal, which means that there will likely be a change to tariffs on imports from China on November 1st, though none of the points address the core issues of America's economic conflict with China. While markets have rallied on the news that the latest trade spat between the two nations is easing, it belies just how well the Treasury market has performed in recent weeks, as investors square positions ahead of tomorrow's Federal Open Market Committee decision where a 25 basis points rate cut is expected. The Treasury market saw mixed results across auctions yesterday, with the $69 billion sale of 2-year notes from the U.S. Treasury drawing a somewhat softer demand, while the $70 billion 5-year note offering showed a notable rebound in investor interest. The 2-year note cleared at a 3.50% yield, which is below the recent average of 3.98%, suggesting investors were comfortable accepting lower returns, though overall demand and foreign participation were slightly weaker than normal. In contrast, the 5-year notes stopped at a lower than expected 3.65% yield, signaling a solid appetite from buyers, especially foreign investors who took a larger share than usual. The strong 5-year results helped push yields modestly lower afterward, breaking a streak of softer auction outcomes and suggesting renewed confidence in intermediate-term treasuries. For today's interview, I wanted to welcome back to the show nCino's Casey Williams to discuss the latest wave of AI-powered mortgage innovations and how these tools are redefining lender efficiency, borrower experience, and what's next in intelligent mortgage automation. You and I actually spent some time with each other at MBA Annual in Las Vegas last week. It was nice to swing by the nCino suite and see you and Amanda, and I always like talking to y'all. But I saw that nCino, you shared some of these latest platform enhancements from the hub stage as well. So let's start there. What's kind of the broader vision behind your team's new wave of AI-powered capabilities?
Yeah, thanks. And thanks for swinging by last week. MBA had a lot of excitement around it, and it's always great to cross paths in person as well.
Yeah.
But yeah, the hub stage, we had an opportunity to showcase a number of the features that we've been working on. Some of these are new features, but the reality is most of these are features that we've been working on and that we launched in May, and we've continued to iterate and add additional enhancements around it. We talk a lot around AI. I want to talk around what our outcome we're looking for with AI, and that's mostly around efficiencies, right? Efficiencies and automation. AI just happens to be the vehicle that we utilize for it. And so You probably saw on stage a lot of these enhancements or these advancements are helping lenders do more with less at a time where hopefully we'll see mortgage volumes, and we are seeing mortgage volumes pick up, but hopefully we'll continue to see that, trying to do more without having to continue that cycle of now I need to go out and hire 20, 30 more people to process these things. But how do we utilize technology in a smart way?
I'm hopefully optimistic here that what you just mentioned is the big lesson that the industry learned from this last market cycle about scaling down and up, because for so long it was like a drunken sailor at port sort of thing of like when times are good, and I don't need a plan for ahead. But I think that's changed, and technology has really helped with that. I do want to talk kind of one of those tools that was mentioned on the hub stage, and that's something called AUS Smart Tasks. What is it? How does it help lenders in practice?
Yeah, great question. AUS Smart Tasks is our version of being able to automate AU, not just AUS, but its findings as well, right? And so we launched our AUS product a couple of years back, and one of the pain points that we hear is that, hey, you run AUS, and then whether it's DULPA, spits out a document with conditions and findings that a human has to then go and pick up, interpret, identify what needs to go back to the borrower, what stays with the loan officer. There's a lot of manual intervention that takes place at that point. AUS Smart Tasks picks up those documents. Our agent reads the documents, identifies, hey, what tasks does the borrower currently have versus what's on these documents, and it automatically creates what isn't there. Kind of does a diff check, right, between the two. So again, automating that process is we know that, hey, based off of these findings or based off of the AUS run, we're going to automate a lot of things and make it smart. This results in faster borrower feedback, cleaner loans, fewer manual touches, and overall a more efficient loan in general.
I also saw something you announced called the Refi Opportunity Analyzer, and that feels especially timely, given the current rate movement driving refi activity and just the market in general with these huge recapture wars that we're seeing going on out there amongst companies. Everybody's trying to get their share of the refinance volume, at least when it comes to the Refi Opportunity Analyzer. What's the idea behind that tool?
Yeah, we sit on a mound of data. This is all customer data, and we feel like we are stewards of being responsible with that data. That responsibility comes with how do we present this back to the lender to then approach the consumer or a borrower, and being able to make smart financial matters or decisions. So our refi opportunity analyzer, it continuously scans a lender's closed loan portfolio against live market pricing. It identifies strong refinance candidates. It presents those to the loan officer. It'll calculate things such as, hey, what's the monthly or lifetime loan savings so that they can have a succinct conversation with the borrower. Honestly, it helps loan officers get out of spreadsheets and more all within one platform, as we see rates consistently of, hey, in the last 48 hours was a great time to lock a loan, and then they bounce right back up, right? Rates aren't in that stability phase in which we're hoping for. And so we feel like providing a tool for loan officers to be able to get that in a quick, easy manner and capture those loan officers is really important.
We mentioned Mortgage Advisor there, which I know launched earlier this year. How has Mortgage Advisor evolved since its launch?
Yeah, Mortgage Advisor, it now supports borrowers after just the first step. It's not just post application, and it supports borrowers throughout the entire process. Things such as I'll use my current scenario of I upload my tax returns, right? I had two dependents last year. This year, my wife had a child, and so now we have three dependents. If I was filling out a loan application while my wife was pregnant, do I include my third dependent that's going to be coming? Do I not? We see a lot of those questions and fallout in a loan application experience. And so advising a borrower and giving them the opportunity to ask questions that they might ask a loan officer, which a loan officer can still interject and get involved, but being able to give them real-time answers in whatever their native language. To me, that's one of the most important things is helping individuals with home ownership, but also helping individuals who home ownership is a very complex, complicated process, and trying to streamline and make that as simple as possible for whether you speak English as your first language, Spanish, Mongolian, French, right? It supports dozens and dozens of languages, and it's important for me to make sure that equitable experience scales for all home buyers.
Well, I want to ask, how's it living now with three dependents? I also should say saying "u," which is hello in Mongolian, since I speak a little bit there. But how's it been being a dad?
It's been tiring. That's probably the best way to put it. It's a little bit sad going to MBA and getting 5 hours of sleep feels like a good night's rest.
5 hours of sleep sounds like a good night's sleep to me at this point. But
Yeah.
yeah. One other update I do want to touch on, and that's doc validation. There's obviously a lot of vendors out there offering document AI in the market right now. And I'd love to ask this question. What is the differentiator? How does nCino's approach stand out?
We try to take a smart approach with our document validation. It's not just validating the document, it's also pulling data off of that document and making smart decisions based off of it. Very simple examples of, hey, Robbie, did you upload your bank statement? Right? We can identify, is this a bank statement? We'll also pull data off of that bank statement and identify, hey, oh, there was 4 pages. Do we recognize all 4 pages? Or we could take that a step further and say, oh, we recognize a large deposit. Robbie was in Vegas last week. Sounds like he had some good winnings, right? We can automatically create a letter of explanation to be sent back to the borrower to explain what this large deposit is. So we're recognizing the documents. If it's incorrect, educating the consumer in real time, hey, go and update the accurate document, so that you're getting that speed to close, speed to market. But not just that, we're also helping making decisioning post document upload faster through letter of explanation, alerting a loan officer that, hey, this document was uploaded because it is the correct bank statement. But FYI, we also asked for a letter of explanation, or FYI, you should still set a pair of eyes on this and not just automate the entire process. When we can automate the entire process, we will. But again, we know there's so much with documents that we want to make sure that we're being responsible not just for the consumer and getting the right documents uploaded, but back to the loan officer as well, being able to be educated on what's being uploaded.
I feel a little greedy asking this after you ran me so comprehensively through all those other offerings, but what's next? What can we expect next from nCino?
Yeah, a lot's next. We're really excited about what the future holds. A few teasers, or maybe one teaser that I'll put out there is we have our mortgage advisor product for borrowers. We're also really excited to be able to launch in the next couple of months our mortgage advisor product for loan officers, right? Being able to have a loan file come in and ask things such as does this loan qualify for an FHA loan? Or does this borrower qualify for an FHA loan? Or utilizing some of our agents to be able to say, send a pre-approval letter to Robbie Chrisman, rather than having to go through manual processes of doing all of these things, but being able to utilize whether it's voice recognition, AI, machine learning, all of the above, right? To ultimately help a loan officer do things in a more succinct, efficient manner.
Well, I'd certainly be interested in a demo of that, but for listeners out there who want to learn more or see these capabilities in action, kind of best next steps.
Feel free to reach out to me directly, casey.williams@nCino.com. You can also go onto our website and fill out our demo form, and we'd love to get in touch, set up a demo, and show you these things live in person.
There you go. Casey, always a pleasure. I think conference season's winding down here a little bit, but I'm sure I'll see you on the road soon. We'll just identify each other by the bags under our eyes. But always a pleasure talking to you and look forward to having you back on the show.
Thanks, Robbie. Appreciate your time.
Today's economic calendar has nothing from the U.S. government. Redbook same-store sales, August house prices from Case-Shiller and FHFA, which are both expected to decline 0.1% month over month. Consumer confidence, Richmond Fed surveys, Richmond manufacturing and services in September, Dallas Fed Texas non-manufacturing, and Treasury auctioning $44 billion of 7-year notes. We began Tuesday with agency MBS prices slightly better than Monday's close, depending on coupon and maturity. The 2-year yielding 3.49 and the 10-year yielding 3.98 after closing yesterday at 4.00%. Let's wrap up with a joke and some housekeeping. Here are some things that sound dirty on Halloween, but aren't. Once you get under the sheet, start moaning and groaning. Just hop on that broomstick and ride it. Quit screwing around on the porch. Stick your hand in and guess what you're feeling. They'll suck you dry if they get their teeth in you. I bobbed and bobbed, but couldn't get my mouth around it. Thanks again to Optimal Blue for sponsoring this week's podcasts. Optimal Blue is the only end-to-end capital markets platform built to power performance, precision, and profitability, helping lenders of all sizes operate more efficiently, manage risk more effectively, and maximize results. To learn more, visit optimalblue.com.